stocks in Asia recovered little ground Wednesday after a new virus originating in China drove markets into the red a day earlier. That slump came as China confirmed that the new coronavirus can be transmitted between humans. China's response and candour have helped reassure investors concerned about the possible global fallout. China's Shanghai Composite was up 0.4%, reversing earlier losses. The index had fallen more than 1% during the early trading. Hong Kong's benchmark Hang Seng Index moved up 1.1% after recording its worst day in more than 5 months. South Korea's Kospi was up 1.2%, while Japan's Nikkei 225 was 0.6% higher. Australia's S&P ASX 200 shrugged off worries to hit a fresh record high. The MSCI index of Asia-Pacific shares outside Japan rose 0.71%, recouping almost half of Tuesday's drop. European stocks were hit on Wednesday by U.S. President Donald Trump's threat to slap auto tariffs on EU-built cars and a gloomy auto sales forecast. Shares in London, Frankfurt, and Paris closed lower after Trump said he would order a 25% surcharge on European cars if the EU did not agree to a trade deal. Against this backdrop, shares in car manufacturers Volkswagen slid by 1.2% and Daimler lost more than 2%. Meanwhile, in Davos, European Commission President Ursula von der Leyen highlighted prospects for a wider trade truce, saying that an accord between Europe and the United States was also possible within weeks. The French CAC 40 index was flat at 6,042.50, while the FTSE 100 index slipped 0.3% to 7,590.49. The German DAX 30 bucked the trend and rose 0.05% to finish just barely off a January 23, 2018 record close of 13,559.60. And on the data front, French manufacturing sector sentiment rose in January, a day after German IFO economic expectations reached their highest level since 2015. In the United States, the S&P 500 and the Nasdaq Composite rose to record highs on Wednesday as IBM and Apple led tech shares higher. IBM shares climbed more than 4% on the back of quarterly numbers that beat analyst expectations. The company also issued 2020 earnings guidance that topped estimates. Apple, meanwhile, gained 0.6% and hovered just below its all-time high. Tesla shares surged 0.7% as the electric car maker's market cap broke above $100 billion for the first time. The Dow Jones Industrial Average, however, fell 14 points to erase a gain of more than 100 points as Boeing shares dropped more than 3% after a downgrade by a Vertical Research Partners analyst who said he is throwing in the towel on the airplane maker. In currencies, the greenback turned lower nearly across the board after an earlier ascent after Trump once again called the U.S. national currency very strong and criticized the Federal Reserve for hiking rates. Against this backdrop, GBP USD surged decently and regained the 1.31 handle after the British CBI trends figure beat expectations. Besides, the quarterly business situation index rebounded sharply to plus 23 in January from minus 44 in October and marked its highest level since April 2014. As a reminder, Tuesday's stronger than expected UK wage growth figures forced investors to temper expectations for an imminent interest rate cut by the Bank of England at its upcoming meeting on January 30th. As for commodities, oil prices failed to hold above the 200 DMA and dipped to 7-week lows just below the $63 handle, close to the 100 DMA. Brent came under a heavy downside pressure soon after recording weekly tops at $65.70 at the start of the week. Market dynamics show that oversupply concerns continue to weigh on traders' sentiment, overshadowing supply disruptions in Libya. Also, the negative pressure comes from the recent virus outbreak in China and its potential impact on the economic growth. After a sell-off, Brent crude managed to climb back above the $63 handle, but still remained on the defensive ahead of the EIA crude inventory report due later today. And that is all for today. Thank you so much for watching. Please click subscribe to always be in touch with the latest market news.